Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 11th, 2023. And today we're going to talk about the single most important chart in all of cryptocurrency. Okay? It is the single most important chart. And of course, I'm referring to the DXY, not Bitcoin. Okay? The DXY is the single most important chart in all of crypto. If you're subscribed to this channel, you'll know exactly why. This is our main indicator, okay? This is our main indicator. Bitcoin, a multi-billion-dollar asset class, goes up and down, not because people pump billions of dollars in at any given time, okay? Bitcoin, a multi-billion-dollar asset class, goes up and down only because, well, not only because, but mainly because the underlying asset, the dollar, the US dollar, gains and loses value, right? And how does the dollar gain and lose value over time? It is through the fluctuation of the DXY, right? Which is an index of currencies that the US dollar is traded against. And so essentially the DXY is a measure of the dollar's strength vis-a-vis these other assets, right? The British pound, the Canadian dollar, the Swiss franc, the Swedish kroner, so on and so forth. Okay, the Japanese yen. So that is how the fluctuations in our market work. This is why we look at the DXY, okay? Yesterday, we talked about Bitcoin. We talked about how, it was likely that within 48 hours, we get a big move, okay? So we have approximately 48 hours left, according to my Elliott Wave analysis yesterday. And Bitcoin was likely to go down in that period of time. It's been approximately 24 hours since I made that analysis. And that analysis has been disproven already, okay? This is a good point. Doesn't matter how much you do, and I literally do analysis every day. I've been doing analysis for 100, maybe tens of thousands of hours, maybe 100,000 hours. I've traded millions of dollars, okay? I've traded millions of dollars of actual, money, right? Not like paper trading. It's still important, and I think one of my strengths as a trader and as an analyst is to, Peter Brent says this well, have strong opinions held loosely. I have strong opinions held loosely, meaning I made an analysis, right, of Bitcoin's price action, and I did my best. I looked at the price action. I was like, oh, okay, I see 5 waves here, whatever, okay? And that, to me, was likely going to play out. But that didn't play out. It's already disproven. My idea that this was an A-B correction, right here. Where was it? Okay, here. I had to clean it up yesterday because I was let's see. Something like this. Yeah. It was something like this. Yeah. Has it already been disproven? Let's check. I have a strong feeling that it's not going to play out, okay? Okay, actually, it hasn't yet been disproven. Hasn't yet been disproven, okay? Hasn't yet been disproven. Reason being if you look, that would be wave A, wave B. This would be the pivot A, B, okay? And then you would come down. It's just, it doesn't look likely, okay? It doesn't look likely for a few reasons that we're going to get into, okay? And that's not a problem. It's not a problem. It looks more likely that what we're going to do is continue up here, okay? Let's see. Yeah. So we're going to look at the rest of the market. We're not just going to look at Bitcoin. We're going to look at the rest of the market. And but basically, my point is, I'm kind of digressing. My point in saying this is you can do all the analysis you want. You have to know when it's not likely going to happen or when it's not playing out. And one of my strengths is, okay, I know when to cut bait. I know when, okay, I don't like the way this is looking. This is not how it's supposed to look. That's part of why you make a thesis and then you follow it, you monitor it. And I monitored it and I'm like, nah, I'm cutting bait. And so I started building my positions earlier than I thought I would, because I looked down my watch list, and chart after chart, I saw bullishness. I saw support levels that I didn't think we would reach that quickly, right? So anyway, I'm saying all of this because it's important to look at this, but then say, hey, look, Bitcoin's chart is pretty complex, right now. Trying to track this particular uptrend is tough. It's not that easy, right? Where are the 5 waves? I don't know. This looks like it was the 5 waves right here and the 3 waves. I'll show you that really quickly, and I'll tell you why. So if you go on the hourly time frame, and you just look at this right here. 1, 2, 3, 4, 5. And then 1, 2, 3. That looks like a 5-wave move and a 3-wave move, okay? And you can obviously take the time it took to form these 5 waves, about 22 hours, okay? 22 hours up. And about 18 hours down, okay? So it's very comparable in time, and obviously it's comparable in price, because if you take your Fibonacci retracement level, those 5 waves retraced with these 3 waves down to the 0.5, which we expect a wave 2 to retrace to, between the 0.5 and the 618. So everything looks good for this being the move. So this is still impulsive. And when I was looking at what Bitcoin was doing yesterday, kind of moving here in this correction, I was like, this looks like an intra-wave correction that's likely to continue. So I'm just going to think in those terms, and precisely, or indeed, it happened to be that, because we got this big reaction afterwards. And so it's likely that we're continuing, okay? And this is part of what's difficult to wrap your minds around. We've spent 600 to 800 days either down or sideways, and it's hard for us to think of the market going up mostly and sideways a little bit and then up again and sideways a little bit. We're like, oh, no, it's got to come down now, because you're just not used to seeing the market like that. 600 to 800 days is a long time to look at something and not be conditioned by it. Okay, so I think I'm literally thinking in terms of a bear market, even though I'm the first to assert the bull market is here. But this is proof positive of the trend changing. Okay, if you look right here, you don't get this type of price action in a bear market. Okay, where you just go up, intra-wave consolidation, up, intra-wave consolidation, up, intra-wave consolidation, up, intra-wave consolidation, up, intra-wave consolidation. And you can just keep going, okay? And that's what it looks like we're doing. Where we stop, nobody knows. Okay, that's the tricky bit, right? Trying to dissect all of this, right? We say bear markets and sideways markets are difficult to read because they're corrective waves. That is true. But, I mean, impulses are not always easy to read in and of themselves, especially on the smaller time frames. As you can see, it's just a bunch of, I mean, you can channel it. I think that helps a bit. But it's really, it can get involved, right? So, how do you measure it? Like, when is it going to correct? How is it going to correct? It's tough. So that's why I would always say, if you have a good reason to suspect an uptrend or a downtrend, the best thing is catch the trend, ride it. That's it. Okay? Catch the trend and ride it. Now, I didn't botch all of my reads, as we'll see in a moment when we go through the watch list. There are certain assets, there's certain markets or altcoins that I did read correctly, okay? Bitcoin wasn't one of them, all right? But today we're not necessarily going to focus on this chart, okay? And one of the reasons I brought this chart up is because when something's so complex and it's like, I don't know how to read this, go to something you know how to read, right? Default or look at something that is more simple that you can make sense of instead. And that to me is the DXY, right? We talk about the DXY as the main indicator. It's the market mover. It's the underlying asset. That's why it's the most important chart, because all of these other charts are tough to read, to be honest. Okay? Akanksha says, hello, Akanksha. How was your day? My day was great, thanks. Great. A long night, but, I'm like a tax man. I work for a few months out of the year. Actually, during the bear market, I've been pretty busy. Bear markets are busy. Bear markets are where you do most of your work. Most of my education happens in the bear market. Most of my strategizing, all that stuff happens during the bear market. So I'm a little tired. I'm not gonna lie. And nights like last night, where I'm really looking at building positions in a short time frame, and scouring the markets and making sure I'm getting in on support, and then protecting my downside positions. That's a little stressful, but we're all good. Woke up, exercised, had breakfast, or brunch, whatever I have. And yeah, I'm feeling good. I'm feeling positive. That's the main thing. Always gotta try to maintain a positive disposition. Mental, psychological hygiene is just as important as the physical hygiene, I think. So yeah, this is the main chart I'm looking at, okay? What is it? Obviously, it's the DXY, as I said. And specifically, this move, excuse me, is what I'm looking at, okay? This bear flag, okay? It's you can call it a bear flag, you can call it an impulse with intra-wave consolidation, it doesn't matter. But this is the move I'm looking for. This is the move that starts the face-melting, attention-grabbing price action that we all come to know and love in bull markets, okay? And this happens very soon. As you can see, our momentum indicator is completely overbought, okay? That means we're headed down. And as you can see, this channel is about to break to the downside, right? Once it breaks to the downside, it sets this off, okay? That move, remember, on a higher time frame, represents an initiation of this pattern right here, this head and shoulders pattern. Massive move to the downside that we've been waiting for, okay? Single most important chart in all of crypto. And so when we're trying to guess as to what's going on in the market, when it's going to happen, I think the simplest thing to do is just look at the DXY, right? Whenever this breaks, is when the fireworks start. Simple. Okay? A lot simpler than reading Bitcoin's chart, I'll tell you. Now, let's go back to Bitcoin and our altcoins, okay? So we're on the 4-hourly time frame. Like we said, this is a complicated kind of impulse. It's involved, right? A lot of choppiness. It looks to me like it's like a mix of a leading diagonal. It's like a never-ending leading diagonal. That's what it looks like. And when it stops, I'm not exactly sure. Is it going to be the top here? I don't know. Anyway, we discussed that. Let's move forward. Okay, Dodo. Here's one I got right. This is from yesterday, right? I said this was likely 5 waves up. Boom. Okay. And you were likely to get 3 waves down. That's exactly what we got. Okay. Now that time frame was off because I thought that we were going to hit it tomorrow, right? But it looks as if we came down sooner than I thought. Maybe we do some consolidation before moving. I don't know. But as you can see, that level that I said in this chart was likely that we come down to is exactly where we came down to. So that was a positive read in terms of, a trade plan that played out, minus the timing, okay? But that's like, extra bonus points for timing, right? As long as you get the levels, that is a great trade. Again, I'm not taking this trade. I already told you. I'm maxed out on Dodo. I literally can't buy any more from the exchange, even if I wanted to. So there's that. All right, moving forward, we have RSR. This one was also well read. I said that we are likely in what did I say? I said we're likely in intermediate wave 4, and that's what it seems like, right? If this green Elliott wave count is the primary count, 1, 2, 3, 4, right? Intermediate wave 4 of primary wave 5, so this all is primary wave 5, right? And this is intermediate wave 1, 2, 3, 4, okay? That's what I said. We were likely in intermediate wave 4. We got our nice little flat correction here. Boom, boom, boom. And so from here, you head up. That's, simple, straightforward enough. And also, I read it as such. Essentially, what you were doing with this intermediate wave 4 is retesting this level, which was previous resistance turned into support, right? So you broke it, boom, boom. That's an RS flip. Resistance turned into support. And from here on out, you get the breakout, okay? So that actually was not counting Bitcoin, we're 2 for 2, Dodo and RSR, yeah? Pat on the back. But RSR also, I didn't trade anew. I'd already been in a good RSR trade, and so wasn't touching that. Actually, let me check one thing. 1 second. Let me see something. 26. Let's see. Okay. Oh, okay. Perhaps. Yeah. Yeah, let me change that really quickly. I'm just doing something really quickly. Sorry. Just some trade management stuff. Gotta write it on my whiteboard really quickly. Okay. Nice. Okay. That's done. Alright, moving forward. Shiba Inu. Um, this one, I kind of got... Here, let's see. This one I kind of got right as well. The reason I have two different charts of the same asset is because I'm trading on Femex. And by the way, if you're trading on Femex and you're using US dollar denominated margin contracts, Femex is phasing those out. So you should close your positions sooner than later and switch to USDT denominated contracts. Just kind of a note there. That's important because if you're in a position and it's up big and you want to keep it for the duration of the bull market and they stop providing service for that, it's really going to suck. So don't build positions for the bull market in USD if you're using Femex. And if you're using Femex, you will have likely gotten that note. Anyway, SHIB, I said it was a leading diagonal as well. I'm using the Binance chart just to look because it has a little more data. But then to get the particular price levels to build my positions, figure out my liquidation point, all that stuff, I'm using the Femex chart. That's why I have the Femex chart here. Okay. I didn't actually... So, yeah, that's a good point. When I first started trading, I just used any old chart for any asset, not really being precise enough to use the chart specific to the exchange that I was trading on. That's a big deal because, when you're dealing with really high leverage and you want precise entries, exits, you really want to use that exchange's chart so that your pricing, your figures are exact. In any case, this is the leading diagonal, and my trading plan, my thesis was you buy on support. And what's support? Support is this trend line, right? So if we're in a leading diagonal and we're matriculating up like so, every time we come down to this trend line, it represents a point of support. Eventually what's going to happen is we're going to break out from that support level into an impulse, okay? And so my idea for SHIB was whenever we get to these areas, buy, okay? And that's what I did. So I guess that's another good read, okay? I did also try to make sense of... See, this chart's a little different. Looks a little different, yeah? It looks completely different, actually, right? Same time frame. Oh, no, I just drew it differently. That's what. I'm confusing myself. Yeah. Yeah, that makes sense. I redrew it in a way that made more sense for my trading thesis. And also, if you look, you can see that this is clearly 1, 2, 3, 4, 5, and then the retrace is a 3-wave move down to the 0618 right here. So that's also a good thing to notice. That phi ratio is typically respected. So yeah, that's a good trade. My stochastic RSI's bottomed out. It's oversold on the 4-hourly time frame. That's a really good trade. And yeah, so I guess we're 3 for 3. I didn't get Bitcoin, but I got a lot of different alts. Okay, Ethereum. I didn't know what to make of this. I did not know what to make of this. Kind of like Bitcoin. It's just it seems to be like some type of impulse, right? But leaning diagonal that hasn't really broken out yet. But if you zoom out, what do you see? We're clearly on a neckline. So if we haven't yet broken out, what's likely to happen is this next move's going to be big, most likely, yeah? So that's what I'm seeing here. Probably the neckline is over here somewhere, right? Something like that. Okay? So that's ETH. And let's just look at the bigger chart for a second. I just want to make sense of what I'm looking at. Okay, I see. So it's kind of like some W bottom breakout. I see. Okay. All right. Next. Why do we have Bitcoin next? Oh, because I'm in the wrong list. That's fine. Algorand. Okay, Algorand, I said I wasn't exactly sure. Okay, and I stuck to this. This was a wait and see trade. And what I did was I essentially just used the indicators mostly to get into this position. This is not something that I typically do, but you know, when you can't make sense of things, you got to use whatever you can use, right? And so again, this is some sort of impulse. It doesn't seem like it's correcting a big amount to the downside. When it's going to do that, I don't know. So I'm just literally looking at high time frame, mid time frame, momentum indicators, waiting for that 4-hour indicator, momentum indicator to bottom out. That happened. Important, really important note. When price moves very little, but then the momentum moves a lot, that's telling. That's telling. Okay, specifically, if you're bullish and you move a little to the downside and momentum moves a lot to the downside, like you see here, that's really bullish. Does that make sense? Because it only takes a little bit of sell-off to reset the momentum. That means the overall trend is up. Does that make sense? So that's what I was looking for, specifically for this asset, Algorand. And then obviously I did the same thing on the hourly time frame. So I used a combination of the 4-hourly time frame and the hourly time frame to say, okay, if this is indeed some sort of intra-wave correction, I'm looking for 3 waves as usual, and I'm looking for those momentum indicators to bottom out. Very likely that what you're looking at here is some sort of wave 4 correction. I don't even know. I don't even know. I'm not even going to bother to count it. No. Something like that. A retest of this neckline, maybe? I don't know. The other thing we know about this chart is that this dotted line is major resistance, yeah? This dotted line is major resistance. So when you do break this, you're going to break it hard. You're likely, very likely to come back down and retest it. Okay? Very likely to come back down and retest it. Don't be surprised if you do. Maybe you don't, because we're entering a bull market. But don't be surprised if you do. That's my sense. Okay? That's my sense. But at that point, what I would do is I would wait and see. Once this finishes, you'll kind of know. You'll have an idea. And try and suss out 5 waves. And what you're going to get is, right, an A wave, B wave, something like that. And then basically just take the 0.618 and hide your stops below the 0.618 of that move. And that's it. So that's what I would look for in Algorand. And so, yeah, that was relatively successful, right, in the trade. And I essentially just used indicators, momentum indicators, to get in that trade. No price action. Dogecoin. This was tricky, but it worked out. My thesis was that whatever this is, it's impulsive, right? Because it moves fast. So somewhere in there, on a smaller time frame, there are 5 waves. So if that's the case, all you have to do to get into this trade safely was take the Fibonacci retracement tool, get in somewhere, and hide the stops below the 0618. And that worked out. So that was also a good trade, okay? Guys, this is where you use your skills to make money. And this is how you do it. Like, all these concepts actually work. They actually work, right? The retracement here, whether this is pure impulse, but we know it's not pure impulse, because if it was pure impulse, the retracement would have taken just as long as the impulse, right? But here it took considerably longer, right? So you know this is a zigzag, okay? But you know zigzags respect the 0618, right? And they retraced between the 0.5 and the 0618. That's exactly what you got. And sometimes people are like, well, you know, how do you believe in TA? Like, I do this for tens of thousands of hours, maybe 100,000 hours at this point, 100,000 plus hours. And I keep seeing these concepts, these principles play out. In a zigzag, you go 5 waves up, you come 3 waves down between the 0.5 and 618 of the 5 waves. Period. Happens all the time. You want to trade that? You hide your stops or your invalidation point beyond the 0618. Done. That's exactly what happened with Dogecoin right there in that trade, and it's moving nicely. Looking at it right now, let's see. Yeah, moving very well. Okay? It's not guessing. It's not, obviously you're always guessing a little bit, but, you know, the analysis really improves your chances, right? I put in over a dozen trades yesterday. Got stopped out once. All right? Over a dozen trades, 1 stop out. It was a careless mistake, but, you know, it happens. It's part of doing business, right? Here, Tron, I did something similar. I identified 5 waves here. So any retracement would have been beyond, any retracement would have been above the 0618. Hit the stops below the 0618. None of this is financial advice. Do your own homework. Do your own research. I'm just sharing for educational purposes, okay? So 5 waves up, 3 waves down. In this scenario, it's more likely than not, just judging by the time factor, that the day you spent going up and the day you spent coming down make it so that this is pure impulsive price action. Does that make sense? Wave 1 and wave 2 are comparable in time and in price. The time comparability is the time it takes are comparable, or, you know, more or less 1-to-1. Usually 1-to-1. And then the price comparability, or the price relationship, is usually the fact that wave 2 comes between the 0382 and the 0618 of wave 1. So that's, you know, very, very few rules, very few principles can make you a lot of money when you're trading these markets, if you're disciplined. Osman says, hi Dean, out of all my coins I have margin only on QNT, not much, just 3x. I was wondering how QNT looks to you in the short term. Alright, we'll look at QNT, Osman, no problem. And yeah, it's smart. You know, if you're not a pro, whatever, if you're risk averse, there's no reason to use margin. I use margin just because this is what I do. But if you're disciplined enough, and it does take discipline, right? Be very, very clear. It takes discipline not to use margin, because once you know about using margin and increasing your purchasing power, most people can't help but use it, even if they don't know how to use it. And it is complicated. On one exchange, I have to calculate the liquidation manually because their automatic liquidation calculator is broken. So once you put the trade in, you don't know where your liquidation point is. I literally have to put in how many contracts I'm putting in. I have to figure out like the price that I'm buying at, all that stuff, and calculate the liquidation point. And then I gotta put the trade in there and make sure it's isolated and not cross margin. Like it is a thing, but it's not something I just started doing, right? I've been training and using these platforms and learning, you know, difference between isolated and difference between cross, difference between a hedge, and difference between a regular trade, and how to add to margin to protect a stop loss or a liquidation point and all that stuff. It took time. It took years. It took a lot of trial and error. I would not recommend just jumping in and doing it if you're not familiar. And what Osman did was really smart. Low leverage, it's relatively low risk. Relatively, okay? Because even a low leveraged long, if it's, let's say you only put in a few contracts, then, you know, your liquidation point, your stop point, your liquidation point, let's say, is still going to be, it's not going to make much of a difference because you don't have that many contracts. But if you have a significant number of contracts and you put in a low leveraged long or something like that, it does make a difference. And it's, to me, that's like a spot buy. Like I have one position that's like a 2x and it's kind of indiscriminate 2x. I never have to worry about it because that liquidation point is so low, right? So these are all the strategies. So XRP, very tricky. Very tricky. Look at this. This is one I got wrong, but here's what I did. I saw this 5 waves up, and I said, okay, whatever happens here is likely going to come down to at least the 0.5, because I'm assuming that this is not pure impulse. This is a zigzag. This is corrective in nature, right? And why do I make that assumption? Quite clearly because this took, you know, only 3 or 4 bars, and this took so many more. So there's definitely no correlation, unless this is something I haven't thought of. This impulse, that wave 1, wave 2 was down here somewhere. This is wave 3, wave 4, and this is wave 5. Just thought of that. Okay? So my trade was waiting for price to come back into this region so that I can trade this long. But what happened was it started to break out. So what I did was I measured, well, maybe this is an A wave and this is a B wave. You get a pivot and then you get a move back down, right? But what would be the invalidation of this B wave? The phi ratio, the 1,618, right? So I took my Fibonacci retracement tool of this A wave, and what do you see here? That this phi ratio 1,618 is crossed. It's invalidated. So this can't be an A wave and a B wave, right? So that this has to be, whatever this is, it has to be a continuation of that impulse. Does that make sense? All right. So I think what is going on with XRP at this point, it's quite clear. This is an impulse. It's pure impulse. And wave 1, wave 2 was down here. This was some sort of wave 4. And now you're into a wave 5. Now, when's this wave 5 going to stop? You don't know, because this is 1, 2, 3, 4, 5 waves. But who's to say that you don't have some sort of, what do you call it? Extension, right? A wave extension. And I would not be surprised if this is the start of the bull market that you do get a wave extension in wave 5 here. So I actually so how did I get into this trade? And let me not bury the lead. I got into this trade, right? First being wrong, recognizing that I was wrong, and then figuring out what I got wrong, and then now reframing my trade thesis, figuring out what was going on once I confirmed that I wasn't going to be trading a B wave, right? That's the worst thing. You never want to trade a B wave up, right? Because the B wave is just a counter, right? If this were a B wave, then that's the biggest smoke in all of history. And, if you have any experience in the markets, you've traded this a bunch of times thinking that this was going up, right? Anyway, I just confirmed that with the phi ratio. And now that I confirmed that it was an impulse, I waited for this impulse to retrace here, and I got in right there. Okay, so that's how I traded that. Now it's a question of waiting for this to play out. And so going on the high time frame, I believe it's likely, more likely than not, that we get some sort of move to a significant resistance, I would say about here, before even thinking of putting in a 3-wave move down. So that's my XRP trade. I got that wrong, right, as I said, but I still traded it, and it's a profitable trade because I was able to catch my mistake. Reassess my trade thesis, and act on it. Very important. Have to be nimble. You gotta be nimble. I'm stubborn. I'm really stubborn. But as a trader, I can't be... Excuse me. As a trader, I can't be too stubborn. If you get too stubborn and you don't see what's in front of you, or you don't accept what's in front of you, then you go out of business quickly. Okay, Litecoin. This one, I said we were likely. So I didn't get this wrong, but I didn't know too much about it. I just said it's likely that we're in some sort of. Actually, no. Let me not correct this. I thought that this was going to be the move, right? That's what I thought. But then I saw how this was going, and how we weren't necessarily making any... our momentum was moving down. We weren't making any moves, or the price action wasn't preparing to distribute. Right? We weren't preparing to go down much. As a result, I was like, okay, this is probably some intra-wave consolidation. Now, the way I changed this is indeed a 1, 2, 3, 4, 5, but then we're probably still in that impulse. And so I would have that 5th wave continue out. And then if you zoom out a little bit, with Litecoin, what you can see is, with a lot of other assets as well, you're at really important resistance, as you can see here. Okay? Maybe I drew that a little low. You're at really important resistance. So what's likely to happen is you break that. Okay? And afterwards, perhaps you do a retest. So that's what I see in Litecoin. And I did, once I realized, okay, things are looking a little more bullish, and it doesn't look like we're going to get that larger retracement that I was expecting. I'm getting in on this, and I got in during all this consolidation right here. So no, that's pretty much it. That was pretty straightforward. One of the things that people do in bull markets is they underestimate the trend. The same with bear markets, any trending market. Right? First is the challenge of identifying a new trend, especially if it's just changed, okay? So the new trend is tough to identify. If you don't have the skills to read high time frame markets and know that a trend has changed, and then once you identify that trend, not underestimating it. So if it's a bullish trend or it's a bearish trend, don't get in the way, and don't think just because you've had enough or it seems like it's gone on forever that it's going to stop. That's why we call it impulse and a trending market, right? It just keeps going in that direction for some time. Dent. This one was tricky. It's so far so good, but it was tricky, and it's one of those trades that I put in yesterday where I kept having to add to the margin because I wasn't really sure what was going on. Okay, so let me just walk you through what I did here. Oh, hopefully this is helpful. I don't know how many people trade. Even if you don't trade, I would say it's helpful to see how other people do trade. And I think everybody does trade. Even if you trade spot, that's still trading, yeah? Even if you're not on margin, you're still trading. You're buying something, and then you're with the idea of selling it down the line. That is trading. Yeah, you want to buy low, sell high. That's all you need, right? So yeah, hopefully my kind of my insights and my mistakes and my successes, all that stuff, how I manage my trades, this helps. Okay, I'm not going to get into all of the minutia of how I manage a trade, like how I add to margin, and how I monitor, how I don't sleep sometimes. I'm not going to get into all of that. I'm just talking, brass tacks. So here, I thought that this was a nice 1, 2, 3, 4, 5 impulse. Okay, so for me, I just did what I typically do when I see an impulse. I pull 5-way or my Fibonacci retracement tool, and I track the 0618. Okay, and I hide my stops below. Okay, so I did that for this trade, but I saw that we kept going down, we kept going down, we kept going down. So what I was like, this is a pretty big position. You don't want to add to losers, but at the same time, if this, given the context of, the market trending and changing and the DXY about to collapse and all that stuff, I was like, I'm going to add to this margin more than I usually do. Because, look, if you add to the margin and you lose, you're going to lose that much more, right? You're adding to a loser, right? So I did this and thought of it, and I'm like, I'm going to take that risk because I don't want to lose this, and I think that it's going to change soon. It's not going to go to hell, right? It's not likely. I don't know, So I'm like, okay, no, this no longer can be a zigzag. It has to be a flat correction. So it's got to hit the 0786 minimum, okay? And flat corrections typically, in my experience, retrace to between the 786 and the 914. Okay, that's why I have both the 786 and 914. 914, you can't see it, but it's this level right here. Okay, so the 786 and the 914 of that A wave. So if this is my A wave, this is my B wave, I'm coming to somewhere below in this region right here before turning around. So I looked at my coffers and I thought, okay, I'm going to add to my margin and protect myself in this area. I typically don't trade flat corrections because it's just a recipe for disaster, to be honest. Why? Because you guys know flat corrections can retrace anywhere between the 786 and the 1618. And I've had the experience of adding to a margin until I'm behind this 1618. Okay. And then if you lose that and it happens to be an impulse, then you're so screwed, and you just put in a bunch of money to give to the exchange. So anyway, that was my reasoning. This is why I'm still in this trade, and that's kind of one of my least successful trades, right? I've got quite a bit of margin in this trade, but it's still alive, and it seems like it's found support here at the 786. Also, I was thinking we're going to find support likely at this region somewhere, because there's a lot of price action here. So maybe we come on top of here, maybe we come and wick in here, but at some point here we're going to find support and turn around. So that was my mindset. Obviously, I also used my momentum indicators, right, which seem to be bottoming out here. That was Dent. Synthetics, again, I used my trusty old phi ratio. That golden mean, you can make a career out of it. Some people do. Literally only trade impulses and zigzags. So when you see 5 waves, you just trade them. So 2 ways that I set this trade up. I looked at my leading diagonal, which is tricky. Leading diagonals are tricky, right? They're not like your regular 5-3-5-3-5 impulses. So what I like to do here is set my trend line, okay? So that's my support. Anytime we get on support, I buy, okay? Boom, 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 boom. So that was one way to do it. The other way to do it, identify a 5-wave move. I identified this as a 5-wave move. I pulled the Fibonacci retracement, as you can see here. I targeted the 0618, and I hid the stop below the 0618. That's all she wrote. And it looks like that was a successful trade, because that looks to be a point of support and where we bounced. Hope this is helping. Again, not financial advice. Do your own research. You can know all the theory in the world, but being able to trade this stuff does take a little bit of practice, right? It takes practice to be able to, one, calculate your liquidation levels if you need to, depending on the exchange that you're using. It takes practice to be disciplined enough to follow your trade plan. It takes practice. I don't know if you guys know. The reason I listen to classical music when I trade, and that the live stream has classical music, is because when I first started trading, I would get so nervous. I literally got sick. I would get sick. And part of the reason it's tough to get over this cough is because it's hard to sleep. It's hard for me to sleep when I'm managing positions. I do sleep, but I wake up and the first thing I think of are my positions, because this is my job, and I work for myself, and so I'm always working, and I'm always thinking about work. So the classical music helps calm me down. It helps, especially when I was trading. Like, I would shake sometimes, putting in positions and stuff like that. And the classical music helped with that, and that's why I play classical music on my live streams. All right, the Cardano trade was another one of my trusty 5 waves up, 3 wave down trades here. I saw this as an impulse, see this as some sort of retracement, right? And so I literally just hide my stops behind the 0618. And that's it. That's simple. Real simple. And here, I expect this to play out like something like this. We come up here, maybe we pull in, we put in something like this, right, to retest this level. So I think that's going to happen. I think that level is going to be retested. So yeah. Zilliqa. Same thing, right? When things are impulsive, and if you can identify an impulse, the trade's relatively simple. 1, 2, 3, 4, 5. Any 3-wave move is going to come between the 382 and the 618. I'm hiding my stops behind the 0618. Obviously, this only works with waves 1 and 2. Waves 3 and 4. Wave 4 typically retraces between the 236 and the 382 of wave 3. But sometimes you get extended retracements of wave 4. But still, the 618 helps even with the retracement of wave 3. But it's usually most helpful to trade wave 1 and 2 because wave 3 is so long, okay? And the retracement, you're close to wave 4 and close to wave 5. You know, the retracement can be such that once that 5-wave sequence is up and you get those 3 waves, you can still get hit with this move right here. But if you traded waves 1 and 2, you're usually safe because that retracement usually comes shy of where you got in and where your stops are. Do you see what I mean? That's why traders, Elliotticians, typically like to trade at waves 1, wave 2, and ride wave 3. And then there's some people even, I know, that don't trade. If wave 2 is passed, they don't touch, if wave 2 is passed and wave 3 is printed, they do not take any trades in wave 4. Just because your risk increases substantially, right? You don't know if you're going to get an extended wave 5 or truncated wave 5. You don't know. And then wave 4 is just too difficult to read, right? Wave 2 is typically a zigzag between the 0.5 and the 618 Fibonacci retracement level. But wave 4 can be long. It could be a triangle. It's difficult. So that's the idea. And that is it. Guys, I think this is the breakout we've been waiting for. Let's have a quick look into our DXY. And the DXY just, slowly but surely breaking down like we thought it would out of this bear flag. Okay, I think the big moves happen when that actually breaks down. Amazing Videos of the World says, Dent, yes, we love you. We love you too. Get well soon. Thank you. Yeah. It's just, I need some sleep. And, my mom says, oh, you need to get some rest. Rest is a state of mind. It's hard for me to rest with open positions with positions that I just opened. You know what I mean? Because as a trader, they're threatened. I have liquidation points. I have stop losses and stuff like that. But once we break out and I set my stops in profit, I think I sleep a little differently. I don't check my phone as much, my positions as much. Amazing Videos of the World says, take vitamin C. Yup, on it. JY's Adventure says, check out Zava and AVAX. Zava, is that really something? JY's Adventure says, big partnership announcement. And alts versus BTC. I know it's difficult to sleep. I mean, I get good sleep. I promise I get good sleep. I get really good sleep. It's just the quality, it's different. And bear market's been long, but I kind of remember a sleep before the time that I had open positions, and a market to worry about or to think about. It's just different, and it's fun. Nothing lasts forever. And once things start rolling in the bull market, life is going to be a lot easier because I'm not trading. I'm not going to trade. I'm just going to wait for the bull market to play out before taking profit. So that's the idea. I'm working really hard now so I can not have to work for a while. Okay, we're looking at QNT for Osman first. Okay, so that's the first thing. And then we'll look at AVAX and Java for JY. And then we'll call it a stream because I gotta pick my son up from school. What was it? Wait, what was that again? Oh, QNT. No, that's not it. I don't know why I don't have it here. Okay, we're gonna add this one. The Binance one. Let's just zoom out real quick. Looks like we looked at this. Ah, yes. So, we previously said that this was likely happening in QNT. A 5-wave move, and that 5-wave move would most likely generate some sort of 3-wave move down, okay? And my assumption was that a 3-wave move would be something like this, and at this point here. That's still possible, okay? And then also we had the pattern analysis of this resistance turned support, okay? So we came up, came down. I believe, let's measure this. Because the question here now, looking at QNT is this correction finished? Okay? And the way to answer that using Elliott wave theory is, how long did it take to go up? It took 122 days. Now, how long will it take to come down? It should take around 122 days. I remember, last time I looked at this, I said this wasn't finished because we had this initial move, right? And I said this is insufficient in terms of the time for retracement, right? Obviously, you could be dealing with an ending diagonal, right? But it's unlikely. It's likely that this is an initial break of structure, A wave, and that you're looking for a B wave, and then you're looking for a C wave. My hunch and my read in QNT is that you're still going to be in correction, and that this A wave is now has now led into what you're going to get, a B wave. But that B wave is going to come back down here. And you're actually eventually going to get something similar to this. Okay? So I still think this is in play, Osman. That's my read. Don't be surprised if you go up and all the way back down. Just like that. Boom, boom. Something like that. Okay? Or don't forget that you can always put in something like that, a running flat. That's also possible. For things that are really bullish, you can put in a running flat. So don't think that you have to come all the way back down to these levels. But you're likely to put in 3 waves because every correction happens in 3 or flavors of 3. Okay? Let's look at AVAX and Zava. AVAX. Okay, looking like it's breaking out. So this is the bear market right here, bear market accumulation for this asset right here. 2 degrees of AB basing and a pivot. Let's see. Yeah. Something like that, right? Let me not be lazy. This is that B wave, right? So first degree, second degree, and then here's your pivot, okay? So 2 degrees of AB basing and a pivot, and then this is your impulse. It's starting. I think you don't reach. I don't think you hit significant resistance until you get to the top of this channel. Okay, so I would, if you're trading, I wouldn't trade. I would just, if you can buy this, buy it and just fuck off for the bull run, right? Just let your gains appreciate, compound interest take over. But if you're going to trade it, I would be mindful of this area right here, because that's significant resistance. It is the top of the channel of your bull market accumulation, or sorry, your bear market accumulation channel. So that's AVAX. And then Zava, I've never heard of that. Let's see. Avalanche. Huh, cute. Okay, it's a truncated chart, not much data here. On the daily time frame, okay, I would focus on this right here. This channel right here. Okay, it looks like you just hit the top of this channel. So what's likely to happen is you're going to put in some consolidation, intra-wave consolidation, and then breakout, if that hasn't already happened. So that's the 4-hourly time frame. It doesn't look like it. Okay, you might even, yeah, if it doesn't look like you've done that yet. So what I think is going to happen, because you've hit the top of this channel, you're probably going to put in a move like this, a 3-wave move, right? Retest the top of that channel and then continue. So that's what I see with Zava. All right. Yeah. Thanks, guys. Thanks, Osman. Thanks, JY. Thanks, everyone. Take care, and I'll see you tomorrow.